Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'm going to interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive in there. Let's take a look, see what people are sharing on social media. If you want to follow me, it's at finding_finance. And if you want to join our community, finding-value.com, where I dive deeper into all of these topics, looking for potential investment opportunities to help you guys in the coming commodity and precious metals bull market that we are in. Coming to the first post, we've got myself. Stay focused on the long term, my friends. Silver on the long term, you can see some pullbacks, consolidations over very long periods of time, big breakouts, another big consolidation, which is a cup and handle, and we are breaking that right-hand side of the cup and handle here. It is important to not mess this up. Do not try to trade it if you are someone who does not have the experience in the markets. What I am going to do is I'm going to hold on. I have already taken positions since 2018 for this in physical metals, and I've also taken positions in a lot of the mining companies recently, as you have noticed on the website. Hopefully, we can get this, capture the majority of a lot of this run coming ahead of us over this probably next 5 to 10 years. Now, there's probably going to be a surge here, in the near term, and that may not make up the entire move. A lot of people give me crap. They think that it's going to move directly to 385 in one shot. We're probably going to get pullbacks along the way at some point. So maybe we break out of this pattern completely and then retest it from the upside, from the top side down, and do a retest of that blue line after we break through it. You have to mentally prepare yourself for a little bit longer bull market. Again, I don't know the path, but I want to capture the majority of this move. So keep the long term in your mind. And it is still a possibility that we hit 300 and something dollar silver. That is the projection of the cup projected on top of the breakout that we're most likely going to get on top of it. So it's going to be in the 290, 300, 350. It could go higher than this too, guys. I don't know what the future holds. I don't know what the herd will be like and how much FOMO and how much money will rotate into silver when this gets going. So those are things that I don't know. But all I will say is that the pattern's there. It is broken through the handle on the right-hand side. We haven't broken through the top of the cup yet at about 40, 50 bucks. On a yearly close, we are above it. The yearly close, if we were to look at a yearly close, we want to see a yearly close above $31 an ounce. We're at $32.20 at this moment. So if we get a yearly close above 31-ish dollars, the cup and handle on a yearly closing candlestick price is broken out. And there are a lot of opportunities here with the way that silver junior companies and silver companies are priced against the metal itself. There are incredible opportunities here for investments. Don't mess it up. And if you need help, obviously you can look at the website and join, and that's where I can help everyone. I've got a lot of companies with a lot of reserves in the ground that are developers. And I also have what I think are some really highly leveraged, higher cost producers that will give you a lot of leverage to the price move of silver. And we are seeing that leverage just today, which is Tuesday. Some of them are up 8, 9, 10, 11, 12% today. And I think they could run further. Logan said, I like Logan here. So this is Reventure Capital, or Reventure Consulting, I mean. It says, if I ever become a doomer, please block me and remember the old Logan. And this is his crash predictions. 2021 housing market indicator crashes to 70-year lows. Phoenix in the Wild West of U.S. housing market, 50% crash 1 year ago. These zip codes will crash hardest in 2022, but there was no crash really. Look at all these crashes. You don't make money in the markets. You don't make money in the markets by clicking on this crap, guys. You make money on the markets by knowing the cycle. The cycle is what you need to know. This guy is making money off of clicks. He wants you to click it because you're afraid. He is preying off you. So just watch out for that. Another one from Grady. Obviously, I had to repost this since it's silver futures. I've been saying since August 8th low that he thinks that silver's catch-up move has now started. From that day, the direction has been up. And now we've got a breakout and follow through all over the silver space. Let's go with the service and have been tracked all along. So yeah, we got a big break on silver here. And I agree. This could be a big move in silver. Take advantage of it, guys. Take advantage. David Burrows says, lots of shorts here. Be careful. Both the Aussie and Canadian dollar are telling us something. And what that means is they are breaking out against the dollar. The Canadian dollar, he's got the Canadian dollar here breaking a downtrend line to the upside. We also have seen the Australian dollar breaking. Great British pound is breaking to the upside. And there's other emerging market currencies that are trying to put in bottoms like the Brazilian real and others. I'm very well aware of this. I've been tracking it. What does it mean? Why does this matter? Good question, guys. I'm glad that you asked that. It means that we could see commodity companies outperform. Commodity countries, I mean, not companies, countries. And we can see the dollar weaken. And that is when we get the big commodity bull markets. It's when the dollar starts to weaken, and it is starting to weaken against those other currencies. This is also when money starts to rotate. It rotates away from dollar-denominated assets and goes towards other currencies that are strengthening against the dollar. So they're going to play the returns of emerging markets and the currency differential against the dollar. So that's what they're playing in their returns. It's the return of the stock and the return of the currency. And we're playing that too on the website. We are playing this very heavily. Just to give you an example, guys, there were a couple companies last bull market that went up 80 to 100x in some of these emerging markets. They're commodity companies, but 80 to 100 times your money. And we are at very close to those bottoms right now in those companies. I hope that you know what those companies are. And don't worry, guys, if you're part of the website, you know them. Rock bottom entry. So what if I told you the commodity super cycle is only just beginning? And this is the dollar, the US dollar. So I'm tying it with the currency exchange here. And this is the dollar, the DXY. Look at this thing ready to potentially fall. You can see the momentum is falling to the downside on the relative strength indicator. And we can see a big move lower. That is the denominator. This is what caused the big move in 2002. That was the big commodity bull market when this fell. When the pressure was released at the dollar. This is the pressure we're getting released at the dollar again. If we get that big pressure release, I do think that we are going to see commodities go up. Big, 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 like big, big time. This is also when emerging markets did incredibly well. And emerging markets look very good right now. Coming down to energy headline news. Cushing crude stockpiles near a seasonal 10-year low, 22.711. Expanded Trans Mountain Pipeline starts oil transportation, and boom, lower. So that is Cushing crude stockpiles near a 10-year seasonal low. Warren Buffett, investors produce outstanding long-term results primarily by avoiding dumb decisions rather than by making brilliant ones. So long-term results are a collective result of making decent decisions and avoiding really bad ones. Kevin says the employment component of the Richmond Fed Manufacturing Index just broke through its 2020 pandemic low. As of September, it's at its lowest since April of 2009. Now, there's two ways to look at this. This here is your slowdown. So we are going through a slowdown in the Richmond Manufacturing Survey, current manufacturing employment. We are at a very low level right now. It turned in 2020 at the level that we're at today. It went a little bit more to the downside in 2001 and in 2008-9. So there could be a little bit more downside left in this particular measurement. But the majority of the move is already down to the downside. So I don't think there's probably much left for this to go lower. I mean, it could go lower, yeah, but we're closer to the bottom than we are to the top. And that's kind of what I look for in some of these charts. So the slowdown's already, a lot of it's behind us, I think. We might have one last surge lower, get everybody scared, and then it turns on up. Rick Rule says, I believe that we're coming into a real gold bull market, and it wouldn't surprise me at all if a portfolio comprised only of the very, very best gold stocks appreciates by 300 or even 400% over the next 5 or 6 years. Well, what if you have like crappy gold stocks? Do they go up more? What I've done is I've gone after the high leverage stuff. My major holdings are in the physical metals, and then I've ventured off the physical metal path to what I consider to be the high torque plays, where you've got developers and some of the higher cost producers. That's where I think the sweet spot for appreciation is. I don't have to win on all of them. I just have to win on some of them because the returns, I think, could go up thousands of percents. So that's where I'm at. If I could get a 10 bagger out of the high cost producers and 20, 30, 40 times my money in the small guys, I would be absolutely delighted by that. Delighted. Here's our crude draw estimate for the week for HFI Research. 8.6 million crude draw. That is crazy. Absolutely crazy if that actually materializes for a crude draw. Investment wisdom, another one from Howard Marks. It is much easier to make money when the world is depressed because when it stops being depressed, it's like a compressed spring that comes back. It's a big move off the bottom. That is exactly where I try to buy, is off those bottoms. You have to be patient on the bottom, though. There are potential opportunities to buy further bottoms here in markets that I haven't talked a lot about. And I'm going to start looking at those. As we rotate from precious metals coming off bottoms and starting to get moving, we need to look at other sectors that are coming next. And I'll do that. I'm going to help everyone, and we're going to try to buy as many bottoms as time goes on and try to get what I consider to be some of the best companies in the sectors, best being risk reward and probability of success. It's the combination of all of those things. I'm not looking just for outright return. I need it to have a probability that is good. If the probability is really, really low, I may skip over those or I don't deploy as much money to them if the probability is lower. And I know some people are saying, well, how do you know what the probability is? And that's what you have to look at the company for. You have to look at the company and say, what basically the progress of the fundamentals at that point. Jordan Roy says, miners versus the S&P 500. How much longer can they hold this beach ball underwater for GDXJ divided by SPX? I'm going to tell you not much longer, and we could see a big move in GDX and GDXJ. So GDX is the top one here. GDXJ is the bottom, and these things are coiled springs ready to rip, ready to rip. I'm very excited for this. I have positioned for it. The companies, you guys know the companies I'm in if you're part of the website. They've done very well already. Some of them are well over 100% from where I purchased them in the bottoms there. Some are up over 200% now on one of them. Not all my purchases, but some of my purchases are up about 200%. Cross-border capital says more China perspective, growth in PBOC liquidity operations. Great start. Few trillion more RMB needed. So we're seeing liquidity or stimulus being injected into the Chinese market. So that's what we're seeing here in China. And I think that's why we're seeing the big moves in gold, silver, and some of these other commodities like copper. Oil was up today too. And it's these injections coming into China. Here's wow, China just went all in on stimulus, sending Chinese stocks 4% higher. China's central bank, what they did is they lowered policy interest rates and signaled more rate cuts are coming. They cut rates on over USD 5 trillion in mortgages, eased rules for second home purchases. They lowered the required reserve ratios for banks, freeing up fresh liquidity, pledged over 100 billion in equity market support, and they stated policymakers were studying a stock market stabilization fund. This set of measures is astonishing in itself, but the fact that China opted to announce them all at once is a significant deviation from previous years. All this means is China is again unlikely to stay within its budget deficit target of 3% of GDP and unleashes a massive slew of liquidity that will be felt globally. This is outright bullish for all risky, liquidity sensitive asset classes like quality stocks, gold, and Bitcoin. If effective, it will also provide upward pressure on inflation, which has hovered just above the zero for months. And this is the Shanghai Composite Index working its way on up. So that's what's coming out of China and what they're doing to bolster their economy. And their economy is going through a rough patch in the real estate market. So they're trying to turn that around or go back into a recovery phase with all of these measures that they're doing. It's rooted in demographics and the real estate market interacting with those demographics. Here's another one from Grady. He says, we are extremely fortunate to be here, seeing this glorious commodities bull market develop and having the stamina plus tools to make the most of it. Don't miss or mess this up. It will be the greatest bull ever seen. And this is the commodities versus U.S. stock market, the ratio, and it's doing a double bottom. We're coming out of this bottom where we are going to see commodities outperform the S&P 500 massively. He's got a 36x. Says when this ratio moves up, commodities outperform the stock market. The chart has that preparing for a slingshot look. The slingshot means that it could happen rapidly. We come on down, we stay low. People become, they're in the disbelief phase is where we're at. People don't believe this move. They're like, yeah. And then when it starts to take off, people get FOMO. We want to be early on our entries. I've been in since 2020 heavily, and I've been buying ever since, continuing to add to positions that are down. I am waiting for this. I'm going to absolutely capitalize on this move here. It is very rare to have something this cheap and to be able to capitalize on it from the beginning. Not many people can do it. And what they can't do is they can't hold on. They can't get the initial point, grab it, and then be able to hold through. So if you need help doing that, again, look at the website. I can help you do that. Here's another one. It says the SAM rule, or SAM rule, I'm not how to pronounce that, recession indicator is above 0.55, has always coincided with the recession. Additionally, the Fed is already cutting rates aggressively. Why would this time be any different? And that's his opinion there. And you can see the Fed funds cut down at the bottom here, and this is coming up above that 0.55, where it's resulted in recessions. Here's the modified my yield curve heat map to on-chart display, and I think I'm in love. So what he's got here is these different colors. He's got bull flattener, bear flattener, flattener twist, steepener twist, bear steepener, bull steepener, and whatnot. We've been in a bull steepener. The bull steepener is when the curve uninverts, but it uninverts in a way where the long end of the curve goes up more than the short end of the curve. That's the bull steepener that we've been seeing here recently. And this is pretty rare to see this in this type of environment here where we uninvert the curve, but it's doing it under a bull steepener. So I think there is some inflation being priced into the long end. But if we do go through a recession, I do think that we're going to see the curve fall. The whole curve will fall, and then the short end of the curve will fall more, which is generally what we see in a recession. BAC, it says energy is a bear trap. And I don't know if they released this information to be counter. Like, Is it really a bear trap, or are they releasing this to get people bullish, which then would be a bull trap? I don't know. But what they say is energy is the bear trap. So investors have shorted energy aggressively. Sentiment among energy investors has turned decisively bearish as OPEC Plus now plans to add barrels into a surplus oil market. The problem is we're not in a surplus oil market. So speculative net positioning in total petroleum futures and options recently dropped to the lowest levels since at least 2011, suggesting investors are already more than positioned for a falling energy price environment. Signs of a weak China oil demand have compounded investor concerns, but then we also just saw stimulus released from them. So that's what we got there. It says, but we believe price risks are more balanced. That's what they believe. For all the bearish concerns out there, we believe global energy consumption will likely speed up ahead as the next productivity revolution comes to the fore. So that's what they've got there. And it says, as power demand, geopolitical risks surge in 2025. What they estimate is that renewables will add 2 million barrels of oil equivalent per day in 2025, leaving oil, coal, and natural gas to add the remaining heat the world economy needs. Yet thermal coal supply growth is increasingly constrained, and China seaborne coal imports have increased rapidly this year. They go in and talk about oil and whatnot. So that's their opinions there, is that the markets are more balanced than what they're being priced at. Here's another gold up, oil down day, and I think I went over that last time. So we're going to end it there. Give me a thumb up for the content, guys. Subscribe to the channel. Subscribe to the website. We have that Mayday coupon code. We're going to have a midweek update that's released. Look for that midweek update, and I'll go over what I think looks good. You're probably going to see some precious metals entry points. You could see that. You could also look at some of the other sectors too. There could be some emerging market plays that we're looking at, and I'll make sure to share those charts and my opinions and what I'm looking at to gain those opinions. All right, guys, we'll catch you next time. This is Finding Value.